let's just go with the crude first. I would say you'd be patient. I'm looking towards next summer. I think China needs to get through these headwinds with COVID, and then we'll just see steady demand growth throughout the year as long as we don't have the wheels come off the global economy. And I do not think that's going to happen. There is some sluggishness in chemical demand, but I think crude is very supportive. Regarding Oxy, I think they're well positioned to take advantage of rising crude prices, but they're even more positioned to take advantage of 45Q tax incentive, which basically pays $180 per ton sequestered from direct air capture. And I think they have plans to put 69 of these facilities throughout the United States of America. So they're a leader. And, you know, if all those facilities get built at 1 million tons a year, it looks like 124 billion in tax credits a year. So they have some serious upside with the Inflation Reduction Act.
Just on that issue there, tell us about the actual, I mean, the financial elements that you mentioned are positive, but how can that scale? The technology at the moment, as I understand it, is not particularly scalable.
I mean, I'm not an expert on direct air carbon capture, but, you know, as I understand it, that they're going to take, I think, 1 million tons per facility, and they're just going to keep building these facilities. And, you know, I guess it's how much do you pay them in order to build these things? And I think they'll keep building these things at $180 a ton. I mean, that's a very rich reward, even as a tax credit to secure carbon. I think there would be even less efficient methods that might be economical. So Oxy, you know, if the government's paying, they're going to do the work, right? They're being incentivized to direct resources to do this. Now, whether you agree with it or not, the fact remains that the dollars are there for them to capture. So not only will they be capturing carbon, they'll be capturing tax dollars.